Evening, thanks. I'm Jog Doty, I'm the CFO of Regenersis. I've presented here lots of times before. It'd be really helpful for me to just get a show of hands of who I've presented to before, because I can take a view on how much of the background I need to do or whether I should just carry on and talk through the interim. So who's seen me before? Excuse me? Oh, I did well then, didn't I? Okay, so some new guys. So I'll cover a little bit of background then. So I've been with the group 3 years. And I'll tell you what our group does. We've got different parts of the business, but essentially our business started off as a repair partner. So if you've got a mobile phone, a laptop, a desktop, computers, an iPad, a TomTom, we would repair that. And our customers are multi-billion-dollar customers, and they are in the mobile phone world. They're the likes of Samsung, Nokia. In the mobile phone world, we also have operator clients like Vodafone and Telefonica. If you're talking about in our set-top box business, our customers are customers like Pace, Motorola, Huawei, and in the operator world, it's sort of Virgin Media, Liberty Global. And that's what our business has started off as. 3 years ago, we were in 5 countries. Our market cap was 35 million, and we had 1,500 employees. Over the last 3 years, we've transformed the business. We're now in 23 countries. We have expanded our product range and our client base. We've grown to 6,500 employees, and we're diversified into adjacent fields. So as well as doing mobile phone and desktops and laptop repair, we also have a mobile phone insurance business. We're now the largest mobile phone insurer in Poland. We've also diversified into software. So in April 2014, I bought the best, the biggest, and the most influential data erasure business in the world. That was called Blanco. Paid 60 million euros for it. And it is the market leader. You all will have heard of Norton Antivirus, and that is the Rolls-Royce product when you want to get rid of viruses on your PC. Blanco is the world's market leader for data erasure. So I'm going to cover a little bit about the different parts of the business, and I'll cover our interim results. Usual disclaimer. In terms of financial highlights, I'm the CFO, so I like to start with numbers. We're on a June year end. This is our results to December half year, and I'll cover some of the story. So our revenue grew to just over 100 million. 90% of our revenue and profit doesn't come from the UK now. We're very well diversified into a variety of emerging market countries. We're as far west as Mexico and Argentina, as far south as South Africa, as far east as India, as far north as either Russia or Sweden. I'm not sure which is further north. But we've had some foreign exchange pressure. It's 2% growth in sterling terms, 12% if currency hadn't moved against us. Our headline operating profit, which is a key metric for us, has grown very, very nicely. It's helped by some acquisitions, but 30% growth in sterling terms and near a 50% if currency hadn't moved against us. Our cash flow is very important. I'm very focused on turning our profit into cash. The profit is sort of vanity. The cash is sanity for me. Our cash conversion had been poor in previous years, but it's improved very nicely. My long-term target for cash conversion is 70% of profit, and you can see we've delivered that. And then in terms of cash, I ended the period of 12 million of cash in the bank. It went down compared to June year end, but that's because we did a number of different acquisitions. We have 30 million of unused bank facilities, so I can write a check for nearly 40 million if I want to go out and do M&A. Over the last 3 years, we've done 18 separate acquisitions ranging in size from £250,000 to 60 million euros. One of the exciting things about our business is we're starting to see some very exciting improvements in our margin, and it's starting to tick up very nicely. This pie chart here just shows the different parts of the business. The grey bit is the original part of the business that we started, which is the depot that we started with, which is the factory repair business. The blue bit is the new part of the business, which we call software and advanced solutions. And the advanced solutions, which is, say, our mobile phone insurance business, didn't exist 3 years ago. We started it up organically. And the software business, as I said, we acquired in April 2014. So the blue bit didn't exist 3 years ago. And as we sit today, it is just past a really important threshold and now is over 50% of the profit of the business. Now, why am I excited about that? The software and advanced solutions business is where the margin is at. In our factory business, we'll repair a mobile phone, we'll make a 5% margin on that. It's credible. Our return on capital employed in that business is 25%, so it's not a bad business. But in our software and advanced solutions, our margins are 4 times better, and our return on capital employed is well over 100%. So if I talk about these two different businesses and why we have them, the factory business, it's actually in 15 countries. It's probably about 5,000 employees. And that's really important to us because it provides a network around the world with access to global multi-billion-dollar clients. And if you take a client like Vodafone, we work with Vodafone in 8 countries in the world. Vodafone are in 67 countries. So one of the things that we've really focused on doing when we've been growing over the last 3 years is taking a good customer relationship in one country and say, hi, Mr. Vodafone, we work for you in 4 countries. We've now got factories in many other countries. Do you want to grow with us? And absolutely they do. Once we've sold the basic factory vanilla repair service, we then would go into that customer and say, are you aware of the new data protection legislation that's coming out in 2017 in Europe, which requires you, Mr. Vodafone, to make sure that all of your devices are properly erased and all your consumer data is protected. And if you don't do this, you can get fined 5% of your global revenue, which is about 12 billion quid or something in Vodafone's case. And at that point, we will pitch some of our additional services, such as our Blanco data erasure product. So these different parts of the business are very synergistic and almost symbiotic. One of the things that we've seen in our half-year results, you can see that our profit margin has ticked up. We've moved our margin from 4.6% to 5.9%. That's a reflection of the improved mix and the quality of the business. And my expectation is we'll exit our FY15, what I've guided the analysts, on a 6.75% margin, and that will continue to tick up in 2016, which should be very beneficial for our shareholders, both in terms of EBIT multiples and share price. This is an analysis of our performance in our software and advanced solutions business. You can see the margins ticking up very nicely. This is our factory business, some of the numbers here. So if I talk a little bit more about our factory business, like the previous company Cyan, we focused on the emerging markets. Why we focus on the emerging markets? In the UK, it's 50 million population, probably about 50 million mobile phones. I was using India as an example because the guys at Cyan have just talked about India quite a lot. About 1 billion population. There's currently 500 million mobile phones, but they're the old phones that we all used to use 10 years ago. The basic Nokia ones. They're not actually worth repairing. They're not expensive enough. In terms of smartphones in India, there's probably about 70 million smartphones. And when I say smartphones, I mean Apple iPhones and the new Samsungs and all that sort of stuff. They are very valuable, very expensive. A Samsung smartphone in India might cost $600. That's probably about 2 or 3 months' wages for the average person in India. So when it breaks, they want it repaired. The reason why we focus on the emerging market countries is they're still growing very rapidly. Mobile phone penetration in the UK is well over 100% and grows at 1 or 2% a year. In India, the mobile phone market for smartphones is doubling every year. Okay? So, and if there's more mobile phones out there, there's more that need repairing, and hence our business has been growing. And we've found this in many of the emerging market territories as well. So the growth in those countries is very exciting, and hence we've diversified into emerging markets. And as I said, we're in countries like Mexico, Argentina, Russia, South Africa, and we continue to grow. You can see our revenue growth has grown nicely over the last sort of few reporting periods. It dropped off in that period because we actually closed down our mobile phone repair business in the UK. We weren't making that much profit, so we decided to close it down. And we're very exclusively now focused on the emerging markets. We've announced lots of new business wins in the last 6 months, and that will drop in and start coming through down to the bottom line over the next sort of 18 months. Our profit margin is starting to tick up, but it's not ticked up as much as I'd like, but that's because we've been doing lots of changes in the business. Every time we open a new factory, it can cost quite a bit of money. In the period, we'd opened up 3 new factories last year, Memphis, Portugal, and Czech Republic. We've incurred some startup losses in there, but they're now reaching maturity, and take about 12 months for a site to reach maturity, and that'll start ticking up the profit numbers. I think it's, again, important to focus on cash. So we are cash generative and positive. This is our sort of, this first half of the graph shows how our cash has moved up. And that's meant we've got 25 million of cash, and then we've invested it. One of the key things as we move from being a vanilla repair business into a more tech business is to invest in R&D and CapEx. So to give you some ideas of what we've been doing, in our software business, Blanco, we have 60 R&D guys based in Finland, and their job is to go out there and work out how to erase the data on your phone. Blanco has about 200 accreditations to erase devices, mobile phones, desktops, and laptops from very significant organizations around the world, and their customer base is superb. So if I give you an idea of some of the customers in Blanco, NASA, Buckingham Palace, Ministry of Defense, Department of Defense. We've just sold a solution to Ernst & Young Global, and that's to give you an idea. I mean, those customers wouldn't buy the product if it wasn't the market leader. The other investment we've made in R&D and CapEx is to continue make sure our repair solutions is world-class and leading. Mobile phones change every single year. Apple release a new iPhone. We have to upgrade our repair process, and we've been able to invest money back into the business to do that. And across the period, we've also invested in some M&A. In terms of dividends, probably 2.5 years ago, we started paying some dividends. Our dividend policy, we've said, is progressive. Generally, it's been about a 1% yield on the average share price, and I think the market's expecting a 5% dividend per share for this year. I want to tell you about different parts of the business now and try and explain where I think we're going to go over the next 3 years. And you've got to excuse me, this is sort of a bit of a consulting sort of speak. So what I've done here is shown where we are today in terms of the different business units we've got. The green size of the green blob represents the relative profit contributions from the different parts of the business. The chart on the bottom, the x-axis, is what the revenue growth has been like in those parts of the business. This is on a log scale as well. And on the left-hand side, you can see the operating margin in that part of the business. So this depot, the factories, this is the vanilla repair service. This is where we started 3 years ago. And that green bubble has grown as we've grown our business from 5 countries to 15 countries on our factory business. And then we've added on these adjacent service lines. So Blanco, Scalable, their software, in-field testing, that's a remote diagnostics. I'm not going to distract you by spending lots of time on that. And digital care is our sort of mobile phone insurance business. And as I said, these are brand new. They didn't exist 3 years ago. And you can see that quite quickly they've grown to be reasonable contributors. But what's exciting about them, their revenue growth is huge, and their margin is huge. So that growth in profit is going to accelerate. And this is where I want to get to over the next 3 years. And as investors, this is what I want you to focus on. I think the factory part of the business is key. It's going to grow a little bit. We'll maybe grow it from 15 countries to sort of nearer 20, possibly. But more importantly, I want to grow these parts of the business. So right now, Blanco, Excalibur, these are our software business. I want them to mature into a much bigger bubble, be a much bigger part of the profit stream, and that'll enhance the group's margin. But you can also see the revenue growth I expect to accelerate, and I expect the profit growth to accelerate. Our insurance business in Poland, well, we only launched it 6 months ago, and we've already got 500,000 mobile phone insurance customers in Poland, and we're already the biggest mobile phone insurer in Poland. We're not going to launch mobile phone insurance in the UK or US. It's a very mature industry, and we don't need to. But everywhere where we've got a factory in an emerging market, and we've got 15 factories in different countries, we can launch a mobile phone insurance product. Countries we're looking at next: Romania, South Africa, Thailand. And the mobile phone insurance business, as you can see, the margin is higher and it's good. And then our in-field diagnostics business, which I haven't talked about a great deal, and in the interest of time I won't talk about now, we'd expect that to mature and become a bigger part of the profit contribution. I'm very confident about the future. This is our outlook statement. I mean, it says we're in line at half year and we're on track to deliver our consensus for this year. I just want to be clear, the management team have well over £15 million of our own money invested in this business. So our money is where our mouth is, and we're looking to carry on our very successful growth story over the last 3 years. We expect that growth story to continue, and that's it. So I think I can take questions now. Thank you.
Super. Jog, thank you very much. Do we have any questions, please? I'll kick off, if I may, just pick up on the insurance business. And you mentioned how you went from, in a 6-month period, entering the Polish market to getting half of it, and that's phenomenal. Was there any competition there already, or was it kind of a fresh market? And how do you reach the end customer? Do you sell to, or do you work with a distributor or a retail partner? How does that model work for you?
Okay, so I'll explain our model very briefly. In the UK, if you go into Vodafone, buy a phone, they'll sell you a mobile phone insurance product for about £10 to £15 a month. The Polish market can't afford that. Emerging markets, countries can't afford that. So we came up with a new product. It's about €1 to €2 a month, but it doesn't cover loss and theft. And that leads to lots of fraudulent claims in the UK. It only covers broken screens. And guess what? That's the most frequent cause of damage to phones. You break your screen. Most phones are waterproof now, you see. So we've pitched this product and we've sold it to Polkomtel, which is the Vodafone of Poland, Orange and T-Mobile. And that's 3 of the big 4 mobile phone operators in Poland. And our product is in their 2,000 stores across Poland. So you go into Poland and you buy a £10 a month line rental. Because our mobile phone insurance product is so cheap, it's only €1 a month, they automatically bundle it in. Okay? So they'll sell you a £10 a month line rental product, and it includes free screen damage insurance provided by us. And we take a share of that £1 a month. We give some of it to the retailer, and we keep some of it to cover the cost of any claims, etc. What do I like about this model? Well, we're not having to work that hard for it. We've come up with the system, we've come up with the product, we support on the marketing side. Typically, we're selling these insurances on 2 to 5 year contracts. This is a recurring revenue stream. Margin is good. What's more important, which I haven't said so far, is we don't actually insure the phone ourselves. We don't underwrite the risk. We take some of that revenue and we offlay it with a proper underwriter. So we just sit in the middle as the insurance administrator, and we make a very good double-digit margin that's growing very quickly, and it's a recurring revenue stream for 2 to 5 years. And as the CFO, that's really valuable to me.
Any questions? Gentleman here.
You said the margin on the software side is, you're aiming at 15 to 20%, but your group operating profit is about, margin is about just over 5%. How long do you think it will take before it becomes a meaningful part of the business? Okay, so the software and advanced solutions division's margin's about 20%. The software business itself has a margin of 38%. And it's growing very quickly. Is it a meaningful part of the business in terms of revenue? No, it's about 50 million out of 200. Is it a meaningful part of the profit? Well, it's just gone over half, so I think it is meaningful already. My expectation over the next 12 to 18 months is that the software and advanced solutions part of the business, the higher margin bit, will be about 60 to 70% of our profit, and will continue to grow. And I'm not going to guide out much further than a year.
Any other questions? Gentleman here.
You've obviously grown as an international business. It looks as though you got caught out with foreign exchange. Have you put defences in place?
I don't think we have got caught out, to be honest with you. And I don't think you can actually do that much about it. We have all the transactional hedging that you would expect. The actual problem is a translational risk, and if I just explain what that means. So we've got a guy who runs a factory in Spain. His euros in revenue, his costs are in, his revenue's in euros, his costs are in euros, and he generates a euro profit. What's actually happened is sterling has strengthened a lot, and when we report our results to you, we report in sterling, okay? Because the sterling has strengthened 20% against the euro over the last 12 months, you've got to run 20% harder in euros and generate 20% more profit in Spain just to stand still in sterling terms when I report to you. And the problem is sterling has been strong over the last 12 months, continues to strengthen, and that's what's actually caught us out. And there's nothing I can do about it. Many other companies that are listed have had this similar sort of problem with the strength of sterling. And all we can do is report our results in both sterling terms and constant currency, which we have. And you can see the underlying performance of the business is good. No one's going to take any sort of... there's no bank in the world that's going to take the bet that sterling is going to depreciate in value because they all think it's going to go up. So you can't hedge it away, unfortunately.
Any other questions? Satu?
You mentioned Finland. What are you doing in Finland, actually?
Finland is where our software business called Blanco is based. It's based in a place called Jansu. We have 60 R&D guys that are doing the development of our Blanco software. And then we have a bunch of customers there as well. We don't actually have a factory there. We don't repair anything there. It's an expensive country in terms of resource. So if a phone breaks in Finland, we ship it overnight to Poland. We repair it in Poland and we ship it back overnight. And you get it back in 2 days. So the reason we're based in Finland is there's lots of ex-Nokia engineers that are really bright.
I know about that. I'm from Finland.
Okay, lots of really bright Nokia engineers, and they've been really helpful. And we've been, recruited very, very well. Some very top quality talent that's allowed us to grow our business quite successfully.
I've got a question here.
I was slightly surprised that you said you farm out the risk on the insurance and not carry it yourself, because I rather assumed that all the repairs to these broken phones would be done by your repair division.
Yeah, so we actually do. So the underwriting risk is carried by an underwriter, and they happen to outsource their repair work back to us. So that's a secondary revenue stream. The reason I don't carry the underwriting risk myself is that's not my business. I know how to repair phones. I know what the margins are on that, and that's what I should focus on. If I want to become an insurance business, that's an entirely different market and a different risk associated with that. What I've told our market, our investors, and our board is we're not going to take insurance underwriting risk. We're not big enough to do that. Our market cap's 200 million. You need to these underwriters are billion-dollar businesses. We're not big enough to take that risk yet.
And you mentioned in your presentation that you've made lots of acquisitions of different sizes, and I assume that would be a policy that would continue. But do you see kind of new core service offerings on the strategy portfolio slide you had there? You had with the circles. Do you foresee adding any new circles? Do you think there are kind of obvious things that you can plug in, or do you think you've got most of them covered now?
I think on the repair side, we're pretty well covered. On the advanced solutions software side, I think there's some interesting add-ons. So we have an in-house M&A team of 3 people. They're out traveling around the world looking at things. And the sort of markets and products and services we're looking at in terms of new products, we're looking at something at the moment called MDM, which is mobile phone device management. So if you think of a corporate like Tesco. They'll have, 100,000 employees in it in the UK, 20,000 of those will be senior management. They'll all have a mobile phone each. They'll all have a mobile phone each. They'll all have a laptop each. They'll have an iPad each. And some of those will be their own devices, and some of them will be corporate devices. And what we're finding is these corporates, they don't actually manage that estate very well. And it used to be, these devices weren't very expensive, but they're pretty expensive now. If you've got those 3 devices, that's £1,000 a kit per person. So you need to start managing those devices. So what we're looking at in this mobile phone device management arena is companies that can manage those devices on behalf of corporates, because there's a lot of investment in it. And then secondary, related to that investment, when the device comes back at its end of its life, what do? Just chuck it in the bin? Or do you repair it and sell it to a secondary market? And because we are in both the Western Europe and emerging market countries, we could take that device and redeploy it for our customers, and we do this service, redeploy it into an emerging market country where guys don't want iPhone 4s anymore because you want an iPhone 6. We can lift that product, repair it, and sell it in India on behalf of our customer, and it's still a very valuable product in India. The other important thing about it is actually what's the data available on that device. And we've all read about leaks that Sony have had and Target as retailers had. And actually, what's actually more valuable, and corporates are realizing this now, is not the hardware, but the actual data available on it with corporate espionage. So actually, as a corporate, you want to make sure that all those 20,000 devices at the end of their life come back and get erased properly, and all the data is completely gone. And this Blanco data erasure software allows you to do that. And that's sort of a bundling of the sort of repair solution and the data management. So that's an example of one thing we're looking at. But there's other related things.
Any other questions? I just had one final one, if I may, just about the shareholder base. I think you're quite well supported by the institutions, is that right? What's the mix, more or less, management, institutional, and kind of private retail investors?
Management is about 7 or 8% of the business. Free float is about 70 to 80%. Private investors and retail is actually really important to us. I've spent a lot of time doing these sort of events and evenings, both in London and around the UK. I think, it's difficult to tell, but the institutional shareholder base is very, very blue chip. It's got all the sort of pension funds and investors you'd expect. My gut feel is retail's about the top sort of 15 to 20%.
Okay. So the other remaining, about 60 or 70 odd, with them would be institutional.
Institutional.
Yeah. Okay. And you're still going to carry on as the company grows with that commitment to the retail private investor. You're not going to go off into the sunset and.
Well, I've been doing it for 3 years, so I'm going to carry on like that. The retail investors, you guys are the ones that move the price for us. It's as simple as that.
Excellent. Unless there's any other questions? Okay, Jog, thank you very much indeed.
Thank you.
Thank you.